What's going on, future me? What's going on, people of YouTube? Just want to go through a couple of different things. I took a couple of trades last week, as you guys probably saw in my shorts. Maybe you didn't, but I did execute a couple positions based off of my pre-market plan from last week. So I want to kind of highlight those, go into why I took the trades for myself, why I executed them, what I saw during the execution, what I felt afterward, and just kind of everything in between, just so I'm all the way clear. So as you guys can see, I have gold pulled up at the moment. This is the daily chart. With that, in my pre-market plan last week, I did highlight how we had a potential head and shoulders forming. We already did bounce off of that 618 retracement level, also printing below that level of resistance, also like a liquidity zone, you can kind of call it, with all those wicks and everything else. So my sort of next move from here, from a daily time frame perspective, was to wait for a retrace or a retest of this level of structure here at 1678 before price eventually gets knocked back from that level. I was expecting a knockback from that level, just to be a little bit more specific. And of course, I was expecting that knockback into 1615, which would be the next sort of level from a daily perspective that price could kind of stop up at, or potentially reverse, whatever it might be. So just from the daily time frame perspective, that was my thought process. Also, to kind of incorporate my overall trading strategy, my trading rules, I have 5 of them, right? So the first is a liquidity zone reaction, an SR zone reaction, something along the lines of this. A break of structure, whether it be to the up or to the downside. We have that break of structure here, just from a daily time frame perspective. High and low time frame price action confluence. So of course, if the weekly's bearish, I'd like the daily to be bearish, I'd like the 4 hour to be bearish, and so on. I need those things to align prior to executing a trade. I also need fib confluence, right? I need a level of, whether it be a 618 or 382 retracement level, I need that to be in line with where I think the market is going next, and where, where I want to be within a setup. The fifth and final sort of rule within my strategy is the pattern formation with trend, right? So of course, in this particular case, we have a head and shoulders in confluence with the bearish trend line. So of course, we have another sort of piece of the puzzle that would point me towards wanting to short this particular setup. And these different things, these different rules can show up on different time frames as well. Like I could say the pattern formation with trend is on the daily specifically, and then I have a break of structure on the 4 hour, and so on. So it doesn't necessarily have to be on one particular time frame. It could be on multiple that kind of get combined into the overall bias and overall sentiment that I have toward a particular market or particular pair. Or it could all be on one particular time frame. I could see all these 5 things on the 1 hour and execute it that way. But again, I just want to kind of highlight these things throughout the breakdown of these trades, just so that everyone is clear, of course, as well as my future self is clear on why I took the trade, what sort of rule was highlighted and made sense as to why I would take the trade as well. So just moving on, again, from the daily time frame perspective, was waiting for that knockback into the liquidity zone for, again, that liquidity zone reaction. We had a fib confluence here. We also had a break of structure to the downside here, so I wanted to retest that break of structure. Also have the pattern formation with the trend that's head and shoulders. We had also high time frame and low time frame price action in confluence with each other. So if you look at the weekly here, we were under a very big weekly level. So that definitely played a part into my decision making for the trade, just on the daily time frame, right? So as we go into the lower time frames, 4 hour, for example, when the week ended last week, we ended on this sort of small, like this level of support, this microstructure here, right? And I figured to myself, this would be a perfect place for price to bounce, and the most likely, most probable place for price to bounce would be into the 1659 level. This is where we had the break of structure, and that would be, to me, the most likely zone price would want to go back to before heading back to the downside. And with that, we can look at the 1 hour, same sort of thing. Have this sort of rounded bottom from last week that would, again, incline me to expect a retest or a push to the upside into the next zone before we eventually break back down. So that's exactly what I waited for. I didn't trade. I don't believe I traded Sunday or Monday. I believe I executed the gold position either Monday night or Tuesday morning, or one or the other. I can check back and just confirm. But with that in mind, again, we'll go ahead and let this play out, and I'll talk you through my thought process, what I saw, and what overall signaled me to execute this particular position. I also want to highlight here as well that there is a small fib confluence that made me wait for this particular retest. If you guys can see right here, from the local swing high to the local swing low, we have a perfect alignment of the 618 and this level of resistance right here. So again, that just made the most sense to me to wait on the retest of this level, or maybe even beyond that, to enter something. I also want to highlight as well that in my pre-market plan from last week, I did say that we could pull back into this zone, but we could also grab some liquidity from these wicks up here. So I didn't want to rush into the position as soon as we got into the zone. I did have an alert here, but I didn't want to rush into the position until I saw the move play out all the way and saw a clean rejection all the way from these levels of structure. So again, we'll go ahead and let this play out. And as you guys can see, again, very strong moves to the upside, very good retracement, a very, it just made sense. And I'll go ahead and place my fib here just for added context. And we'll just let it play out. And as you guys can see, right, when I saw this big push to the upside, I was like, maybe, maybe we're going to see a reversal here. Maybe if we don't get this break back below this level of structure, this level of resistance here, maybe, we're asked out. You know what I mean? Maybe we're not going to get sells. So I just let it play out. Again, I don't want to rush into a position. I was already biased towards sells. I'm not going to counter trend trade and get into buys when the overall trend is bearish. It's obviously bearish. So again, I just waited it out, and we'll go candle by candle here. I thought this might have been a retest. And then I saw this big, this big break of structure, this big push to the downside. That again alerted me towards my original pre-market plan, which was then sells, a bias towards sells. So once I saw this, one of my rules was already checked off the list, or actually two of my rules was checked off the list: the liquidity zone reaction, and then the break of structure just on the 1 hour. We could also highlight a third, in that the high time frame and low time frame price action was in confluence with each other, because again, overall trend is bearish. 1 hour trend we see here is also bearish, so that lined up for me as well. We also have the fourth rule of fib confluence. Not only did we reject the 786, we are now printing back below the 618. So that made it a ton easier for me. And then the fifth being the pattern formation with trend, we already have that daily head and shoulders that I'm expecting to play out after a retest. So with those five things sort of already becoming aligned with each other, I was already starting to, my sort of intuition, my discretion, the discretionary trader in me, my senses were already starting to perk up and wait for an entry signal to get in on this. So we'll go ahead and continue. Awesome. We see, a retest of this level of support here. I'm still not into the trade. I wait for this rounded bottom. This little sort of morning star is what I look at. So I'm like, okay, awesome. I missed my entry up here. Not to worry. I'll just go ahead and place my fib on the next sort of local level. So that's exactly what I did. I took it from this swing high to the swing low here. And again, it pops up once more, perfectly in confluence. The 618 is perfectly in confluence with this level of resistance. So I think now, awesome. Not only is this in confluence with all these different things, but this is also, it kind of qualifies like a lower high, right? If I were to get in on this position, the only thing I would need to wait for now is to let price get to this point and then eventually roll over on itself. So I'll go ahead and let it play out. We get a strong retracement back to that level, and then we go ahead and reject it, right? So of course, when I saw this engulfing candle, close with strength, part of me did have my doubts, but again, the biggest sort of thing, sort of factor, nuance, whatever it is, behind me wanting to still take sells is that it didn't close back above this level of resistance in confluence with the 618, and also didn't break back above this trend line or this candle high that it previously printed. So with that in mind, I saw this particular candle and I entered on this particular candle. This is also sort of like a tweezer top, sort of reversal pattern back to the downside. So I had all the confluence in the world already. Again, already having my bias towards sells because of the high time frame and low time frame price action. We had the pattern formation with the trend on the daily. We had a fib confluence here now on the 1 hour. The break of structure below the level prior back here, and then we had the liquidity zone reaction on multiple time frames at this point. So that was enough for me to go ahead and enter this trade. I entered on this particular candle. I believe it sort of wicked up and down for a little bit, so I got a pretty good entry at 1658.63. And just for you guys, I did go ahead and kind of cross-reference these levels and entries from my MT4 account so that it was as accurate as possible and as clean as possible on TradingView. So that's where I entered, and then we can go ahead and let this play out. I'm gonna go ahead and take this fib off, and let's see. So as you guys can kind of see, we already see a big push to the downside. Not a ton of drawdown. This is actually one of my better trades. Not a ton of drawdown whatsoever. One of my big trading rules, I'll go ahead and pause this, is that I do not want to necessarily monitor my trades as soon as I place them. I want to kind of step away and do something else, whether I'm at my desk listening to a book or, you know, consuming some sort of information or going out, taking a walk, whatever it might be. Whatever it takes to not be in front of the chart and not babysit my position. So with that in mind, again, didn't want to babysit the position. I walked away, so I didn't get to see, you know, this kind of price action play out, or even see that there was no drawdown connected with the position. This bounce, I mean, I'll say it just personally. This bounce right here probably would have inclined me to say, maybe it's gonna reverse back on itself and, you know, retrace to my entry. Retrace to my entry, or possibly further than that. But again, it did play a big part, me not being at the screen. So we'll go ahead and let it play out. So I did get a chance to take a look at this. I was actually alerted of this because I placed one there. This break of structure. When I saw this break of structure, I knew that everything was pretty much good to go. I also, before I move forward, I want to go into why, you know, or where I place my stop loss and take profit, and why. My original take profit was down here at 16.14. That was the next level. Made the most sense to me. And then as far as my stop loss, I'll go ahead and place the fib here. I place it right above the 786. I like to always place it at the next fib level, or the next sort of candle high, which would have been up here. I wanted to be a little bit more aggressive in my positioning, so I just placed it right above the 786. Reason being, I didn't want to place it right above the 618. I have had many instances where I get wicked out for placing it right above the 618, so I've veered away from it. That's just my trading rule. It's how my trading plan sort of works. So it'd be either, again, last candle high, or the next sort of fib level up. So again, going back into how this trade played out, we'll go ahead and let this run, and it played out very nicely. It was right here that I started to think maybe I should get out of the position. I went ahead and drew this very fickle trend line, and I was already of the mindset that we could see a pretty strong retrace here back into the level that we just broke from, 1645. And again, it's perfectly in confluence with the 618 liquidity zone, all these different things, the trend line as well. So we have the pattern formation with trend, this whole thing. So I was like, I was already up 4% on the position. So I was like, let me not be greedy and just take profit on this. So this is why the original, or rather why the take profit was here at the beginning of the video. So I was like, let me just take my 4% here. I also had a sort of losing GJ position that obviously I'll get into. Ended up being a winner because I held it long enough, but I was already in a bit of drawdown on that position. So I was like, let me take profit on this particular position to hedge my potential loss on GJ. So maybe not the best ideology, but also when I, put that into perspective with the rounded bottom on the 1 hour here and the potential for the, for price to break this trend line and make that move up to the 618 before another knockback, I was like, I think this is what's best, and that's the decision that I made, and I'm glad I made it. So with that in mind, I did end up exiting the position right here, I believe at 1627, and just kind of wash my hands with it. One thing I did keep in mind though is that we could just retrace back to the 618 before further downside. So I did put an alert here. I didn't necessarily have intentions to enter. If I would have gotten a spot on entry, of course, that would have been great, but I was already happy with the profit that I made in the initial position. So I didn't necessarily feel the need to continue to trade. So we'll go ahead and let this play out. And as you can see, right, this is a perfect 618 retrace. Like, this is the perfect, most respected sort of price action and structure that you'll ever want to see, right? This is beautiful. We have the liquidity zone reaction, the fib confluence, we have the pattern formation with trend, we have, we have the break of structure prior, we have all these different things, the high time frame and low time frame price action in confluence with each other. Like, all the stars aligned to take another position right here. But again, I had made my profit. I was fine with that. I didn't feel the need to get into another position. And as you guys can see, we'll let it play into where I left off this week. Played out perfectly, right? Like, it went even further, almost hit my TP all the way before a small retrace and eventual break of this trend line, and overall structure and everything else leads us to where we're at now. So before I get into my pre-market plan, I'm going to go ahead and cover the other position that I took on GJ. Okay, so my second position was it was one trade, multiple positions on GBP JPY. As I outlined in my pre-market plan, this was a potential double top or a potential inverted head and shoulders to break out to the upside. Wanted to wait for a break and retest of the June high before looking long, or wait for a rejection of that same level to then go short. We ended up getting a print to the upside, a break and retest to the upside, a very strong candle close on the daily as well. Let me go up here, and I actually ended up I ended up making another video on the update of this particular position, the update on this range break and everything else, and how I'd play it thereafter. Let me go into the 4 hour. When we got to this level, I was already of the mindset that we definitely need to have a retest of this particular zone or of the June high. So we could either have a shallow retest of the June high or a very deep retest of this liquidity zone. Either way, I wanted to wait for that retest before I got into buys, but I was looking for buys thereafter because, again, we did get that strong daily close above the level. Maybe it could have been a little bit stronger, less wick. But again, it was still a strong push to the upside, and it, prior to that, we haven't seen anything like it. So I figured that I would just wait for the retest of the zone before moving forward. And we can see that here as well on the 1 hour. It looked a little bit more detailed on the 1 hour for me, especially since we had this sort of rounded bottom here. I was, again, waiting for the retest of the June high or something a bit lower to get a good entry and potentially swing it up to 175. With that said, I'll go ahead and let this play out here. Okay, we see a ton of wicks. Okay. And this is actually where I entered. So with that said, right, let me go to the 4 hour. Very shallow retest. Oh, excuse me. Very shallow retest, right? So when I saw this sort of price action, I was like, okay, awesome. We're sort of flagging to the downside, and we should be able to create another rounded bottom and bounce from this. I believe I also placed a fib right here. I believe this is a 382 retrace. Yes. So that was in confluence with the 382. It didn't hit it on the button, but it was enough for me to say, hey, this is I didn't want to miss it. I guess that was a mistake that I could improve on. Is that instead of, rushing into the position, this was on Monday, the following day. So instead of rushing into the position, I could have waited a little bit longer. But again, when I saw this wick to the downside, I figured I might as well enter the position. It's going to be a pretty good size stop loss. So even if we continue to consolidate within that liquidity zone on the 4 hour, I'll still be in a good enough position to hold and eventually ride it out when until I get into profit. I also didn't risk a ton on this position, especially consider the size of the stop loss, 145. So we'll go ahead and let this play out. Initially, right, like I was in profit for, I believe it was like 40 something pips. It started looking good initially when I placed the trade, and I believe that's when I placed my that's when I started the update on my channel about it and everything else. But we'll go ahead and let this ride out. As you guys can see, right, strong push to the downside, and we get the retest that I initially wanted, which was inside of this particular zone. I woke up and saw this wick, and I was like, wow, I hope I didn't get slipped. Because price had pushed and an incredible amount down and ended up giving me the retest that I initially wanted but didn't wait for, right? If I would have waited for this candle, would have been much better positioned, and the execution overall would have been much better. That's what I could have improved on, but overall, I mean, no regrets. I ended up winning the position anyways, but I could have maximized that win by being a little bit more patient. So we'll let it play out here. And as you guys can see, I was expecting it to consolidate within this zone for a little bit, as I mentioned in the pre-market plan, and it did exactly that, right? There were moments where I was in profit, and I was like, awesome, all I have to do is hold, and we'll go to the next level type of thing. And then I started seeing this particular price action. I started seeing these wicks to the upside, and I started getting a little bit worried, I'll be honest. I didn't want to destroy my psychology by closing this particular trade when I know that although the entry might not be the best, the direction overall, to me at least at the time, I believed it was right. And everything that I had outlined in my pre-market plan as far as consolidating within this zone within this 4-hour zone before moving to the upside. All of my actions were in confluence with that, so I didn't want to cut the position short and end up seeing it skyrocket the following days when I could have just waited it out. So that's exactly what I did. As you guys can see, I get pretty close to getting stopped out. I believe I was literally 4 pips away from getting stopped. And I also want to add, while I'm watching price bounce off of the September 22 high and the last week candle high as well, I'm thinking, okay, this is exactly what I expected, right? I was expecting consolidation within this zone, within the June high and the September 22 high before I push up. My biggest thing, again, was not being impatient enough to capture the entry down here, but instead enter too early up here, right? So again, I still felt that the position was correct. The execution was just a little bit poor, which again inclined me to hold the position. And this is where I almost get stopped out. Oh, is it here? Here it is. Almost get stopped out by literally 4 pips. And again, I just keep on holding. I believe I was sleeping during this time, so I wasn't really concerned. But when I woke up and saw the chart thereafter, I immediately checked my MT4 just to make sure that I didn't get slipped. Then we continued up. So at this particular moment, I figured, okay, awesome. We're always printing above the September 22 high. We're always pushing from that level. So I might as well try to scale in on other positions to kind of capture a little bit more profit and just, again, overall double down on my position. That's just what I felt was right in the moment. And especially seeing these particular bounces previously, all at the same level, I figured it made sense, especially since, again, my overall bias was to get long. I might as well just scale into better entries. So I risked 1%, but between two positions at 0.5%. One I got in a little bit early. Let me see where the candle was. No, not there. Oh, it was actually right here. So on this particular candle, this candle that ended up wicking, I ended up, again, risking 0.5% here. Same stop loss. My take profit at the next level at 170. And then I placed a buy limit. Let me close these positions. Then I placed another buy limit much lower than that the candles that almost got me wicked out of my initial position ended up getting triggered on. So I had an entry up here at 168.20, and I had another entry down here at 167.83. Both of them got triggered, or the first one was a market execution. The second one got triggered thereafter. And we can go ahead and see how this plays out. Of course, we had a huge wick to the upside. I actually ended up closing on this particular wick for, I believe there's 112 pips on the first scale in and 148 pips on the other scale in. So I ended up getting out by the skin of my teeth, because thereafter, as you guys can see, I'll let this play out for you. It goes a little bit higher and then it just immediately dumps. Something that I was alerted to was the Bank of Japan's intervention. With the Bank of Japan intervening, price began to dump. And I'm just glad overall that I was out of the position beforehand. So those are my two positions, or rather my two trades on both gold and GJ. Those are the reasons why I took them. Something that I guess I could have done better, again, on just GJ was being a little bit more patient in my entry, and waiting for a better execution. Again, I don't regret where I entered. It could have just been executed a little bit better. I could have been a little bit more patient instead of FOMOing into the June high super shallow retest. But I think that overall, when I took profit was great. I'm glad I did take profit when I was given the opportunity. And again, only thing I would really change would be the execution of my position, right? Not entering so high, waiting for price to come to me before entering the GJ position. So those are my two trades, my two W's. I'll go ahead and place the profits here. I believe it was 5.5% gain, 6% gain, or something like that. I'll add it up for you guys and put the total there. But with that, let's go ahead and get into the pre-market plan.